And to tell us more about this, Professor Yang Jun-seok from the Catholic University of Korea joins us in the studio today. So good to see you.
Happy to be here.
All right, so the government made an official announcement on Monday in regards to cryptocurrencies and how it plans to regulate them. So what's your assessment of yesterday's announcement?
Okay, I think throughout this event, I was really disappointed in the government because, well, they kept on one ministry and another ministry didn't seem to know what was going on. And this has always been a problem when you talk about regulations, not just financial regulations, but regulations altogether. People have always complained that various different ministries have various different regulations that are in conflict with each other, and this was, I think, a blatant case of that.
And now last week, Justice Minister Park Sang-ki said that the government is preparing a bill to ban the trading of virtual currency in domestic exchanges, which threw the virtual coin market into turmoil. And before we go on, let's listen to what he said.
A shutdown of exchanges will be one of the goals we are aiming for. It has started to resemble gambling and speculation. The term virtual currency may not even be the right term. We will rather call it a virtual token.
So the Justice Minister's remarks sent Bitcoin prices plummeting, but the market's sharp reaction to Park's remarks, after that, the presidential office said hours later that a ban on countries' virtual currency exchanges had not been decided yet.
Okay, well, I think the problem is we don't quite know how to place these cryptocurrencies, whether they are currency or whether they are an investment asset like precious metals, or whether they're just a method for gambling. It has elements of all three. Now, if you take a look at, say, a Bitcoin as an example, it has, I think, three important characteristics. First, it's a virtual electronic currency, but that's a good thing. It's like a credit card, and we use it all the time.
Right.
Second is the blockchain technology. That is also a good thing because it allows a dispersed record keeping. In fact, blockchain is not only used in virtual currencies, but now they're looking at possible uses elsewhere. For example, keeping records of containers used during exports. So you'll know instantly or within a reasonable period of time what's included in those containers, and that information is allowed to go to people who need it fairly quickly. The problem that Bitcoins and other virtual currencies have is that a lot of them have fixed supply, and there's no central authority controlling that supply. And that's not a technological decision, that's a political, economic decision. And that creates a room for a lot of volatility. Now, if we compare Bitcoins or these type of virtual currencies to other type of investment goods, if you compare it to currency, well, these prices are always decided by a combination of fundamentals and expectations of future price changes. And in the case of most currencies, you have a central bank trying to keep the value stable. So that forms a fundamental of a short, it forms an anchor. Now, in terms of, say, things like investment assets like precious metals, you have past history, and a lot of these precious metals do have industrial uses, so that also acts as an anchor for the fundamental. But because virtual currency or cryptocurrency is so new, doesn't have a long history, it doesn't have any other use other than transactions, it really doesn't have an anchor yet. So the expectations of future price changes, component of prices, are going to be very high. That means depending on changes in psychology, you're going to see big volatility in prices, and that's, I think, exactly what we're seeing.
And the government had actually said that the fact that the media is using this, the phrase kimchi premium reflects the foreigners' assessment of Korean market as abnormal. What are your thoughts on this?
Okay, that's a really interesting event because we usually don't expect to see something like kimchi premium. That's about 20 to 30% above the prices of these cryptocurrencies and other countries' markets. So part of the reason seems to be that arbitrage is not working very well. And the reason for that is that a lot of large financial institutions are not getting involved in arbitraging. And so most of the arbitrage is taking place among individual investors. And a lot of these individual investments are limited by the amount of foreign currency that they can buy because there's Korean foreign currency laws limiting the amount of transactions you can make. That's one explanation. Another explanation, I think, which deserves some more research is that, well, there's a lot of newspaper stories where reporters try to arbitrage themselves. And because the price of these cryptocurrencies are 20 to 30% cheaper overseas, they thought that they could make a pure profit. But apparently, after paying all the fees, all the payments that they need to make for transfers, they don't make any money. And I think if that is true, then then it signals that there's a fundamental problem with transaction costs in the Korean financial markets. And because we're trying to develop our financial markets, if those type of fees, those type of high transaction costs exist in the financial market, that means Korea cannot really develop its financial markets.
And I know you mentioned a little bit, but at this point we're kind of wondering, I mean, how are other countries dealing with cryptocurrencies?
Okay, well, countries like Japan and Russia, they're trying to formalize these cryptocurrencies into a usable currency. Obviously, it won't be a national currency like the yen or the ruble, but perhaps like a gift card. So that's their approach. The United States, well, they don't have a formal regulation in place yet, national regulation. Some states do. They do have guidelines on trying to get all the states to form a similar type of regulation. They also have regulations trying to limit the use of these cryptocurrencies in money laundering. And then they do have they're trying to work out a system of how to tax the profits from these cryptocurrencies. Most likely it'll be a part of capital gains tax, but still they're working toward that. China, I think, is looking at this as a disruption. So they've banned mining for these cryptocurrencies, and they're trying to discourage the use of it.
So the government has found special measures to clamp down on the overheated cryptocurrency market, but said plans to ban the trading of virtual money aren't in the pipeline yet. So before we go on, let's take a listen to Chung Ki-jun, the head of the Office for Government Policy Coordination's Economic Policy Coordination Office, on the matter.
The government will push forward with the implementation of a real name system for cryptocurrency transactions. At the same time, the government will crack down on illegal activities involving virtual money, including market manipulation, money laundering and tax evasion, through joint probes by the prosecution and police. The government will decide on a proposed shutdown of virtual currency exchanges after carrying out sufficient consultations with the related agencies.
So with all those measures, I mean, what are some of the changes that we can expect from here on out in regards to cryptocurrency transactions?
Okay, I think they're going back to the plans that they had before the Justice Minister's surprise. That involved a real name system, so that if you want to trade in cryptocurrencies, you have to use your real name. You can only have one specific account where you can make transactions with cryptocurrencies. And then financial institutions are not allowed to transact these cryptocurrencies to try to make a profit, and they're not allowed to use these cryptocurrencies as a safe asset. I think those are pretty much prudential regulations, but I think they do need some more prudential regulations here. I think the two most important regulations that you need is, one, this is a very volatile market. It's a very dangerous market. So I think it's very important that government guarantees that if people are wiped out from these markets, there will be no help. If in Korean economy, when you have a wipeout in the stock market or wipeout in the housing market, there's a lot of pressure to rescue some of those people.
Right.
And because this is such a volatile market, I think if you do that, you'll create a moral hazard on the part of investors, so that they'll keep making these dangerous, volatile investments. And I think there is a need for these type of high-risk, high-return investments. But on the other hand, they should not be encouraged to do that too much.
Right.
So I think that's one way of limiting it. Another very important way of limiting it is to restrict debt-financed investments in cryptocurrency. if we look at the financial crisis that we had not only in Asia but globally in the last 20 years or so, a lot of it comes from debt-financed investments into a speculative bubble. And right now, I don't see that many regulations trying to limit debt-financed investments into cryptocurrency. You can invest in cryptocurrency with your own money, but don't use borrowed money to do it. Now, I don't think the investments in cryptocurrency in Korea is large enough to possibly create a bank crisis, but even if it's not that large, limiting the amount of debt that you can use to invest in these volatile investments will keep people from just being completely wiped out. A way to limit the debt-financed investment in this case, I think, is to expand DSR that we were talking about for the housing market more generally, so people won't be able to borrow extensively to either invest in housing or even invest in these cryptocurrencies. So I think limiting the debt-financed investments into cryptocurrency is something that must be taken, some regulation should be put in place, must be put in place.
Then do you think this new system will allow an establishment of a taxation plan for cryptocurrency transactions? I
think that's the intent. United States is moving toward taxing these as capital gains, and well, it's an if you think of it as an investment, then it should be treated like any other financial investment. So it should be taxed like any other financial investment.
All right. Well, now with all the ongoing controversy surrounding the domestic cryptocurrency market, in what ways do you think the government should tackle problems involving cryptocurrencies?
Okay, as I mentioned before, the plans that were released before the Justice Minister's announcement, I think, are part of prudential regulations. We want to maintain some high-risk, high-return investment, but we don't want it to get too large so that it affects the entire economy or has a possibility of paralyzing the financial sector.
Right.
So those measures that are already announced are a good start, but as I mentioned before, limiting debt-financed investment, I think, is absolutely crucial, and government should move on that right away.
Well, what about some long-term measures then? I mean, there are calls for the government to come up with some long-term measures compared to the measures that they put forth right now.
Okay, well, I think as I mentioned, limiting the debt is definitely part of the picture. I think if you go through a volatile drop in price 2 or 3 times, then this bubble will basically disappear.
Okay.
But as I mentioned before, government has to commit itself to not rescuing people from dropping these investments. Otherwise, you're just going to raise the possibility of having more bubbles because, well, if I gain, then it's my gain, but if I lose, government will compensate me for some of it. It'll create a big moral hazard. We don't want to encourage that.
All right.
So it may be very difficult because a lot of these investments are made by middle class or lower income people, but still, government, I think, has to commit itself to not encouraging these type of investment too much, and as I emphasize again, no debt-financed investments.
All right, let's talk